heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York. Ed Ludlow, he's on assignment. This is Bloomberg Technology. Coming up, the trial of Sam Bankman-Fried. It kicks off in Manhattan as he faces charges of swindling billions of dollars from his crypto platform FTX. We, of course, will have full coverage ahead. And as Micron faces a cybersecurity probe by the Chinese government, a bipartisan group of U.S. senators, well, they're looking to visit China to address this very issue. We'll have more on the U.S.-China relations, plus an artificial intelligence. Can it help hedge funds outperform? The answer, well, it's not so straightforward. We'll break down the results in our Bloomberg Big Take later this hour. But first, let us check on these markets. We're looking at strength in the US dollar as we anticipate maybe a Fed having to remain hawkish. We're up some 0.3%. Look, this is the strongest the dollar index has been in about 10 months. Moving on, what does that mean? Well, for another key asset that we look at versus the US dollar, Bitcoin currently on the lower side. We're off by 1.8% on the day. And this is after we'd seen a little bit of buying yesterday. So once again, is it profit taking, or is it also a look towards the trial of Sam Bankman-Fried? What does the industry make of it as it starts today? We know that he's facing charges that he swindled billions of dollars from his crypto platform FTX. Let's go out to Kaylee Lines for more, who is on the ground in front of the U.S. District Courthouse. And just tell us exactly the state of play, what we're anticipating today, Kaylee.
Well, today, Caroline, it really is all about jury selection. This is just one step in what could be a trial that plays out over the course of the next 6 weeks at a maximum. Today, they are looking at potential jurors, vetting them as we speak. They have dismissed a number already, and we understand the judge is hoping to finish today, if not be finished by tomorrow morning. And then once the jury is set, it really will get into the argument phase of this case. As you mentioned, he is facing a number of charges related to fraud and money laundering, 7 in total. If convicted of the maximum sentence, he could spend the rest of his life in prison. We could be looking at a sentence here of over 100 years if convicted. He, of course, has pleaded not guilty, but really over the course of this trial is when we're going to see a lot of the facts of the case borne out, both from the prosecution and then, of course, the defense. Sam Bankman-Fried has frequently said it was never his intent to commit fraud on anyone.
And, of course, this has ramifications for those who are watching exposure with FTX, but more broadly, or crypto as a whole. You, of course, are the shining light within our crypto show that's playing out later, Kaylee. What does the industry make of all of this? Are they waiting with bated breath?
Yeah, in many ways, Caroline, the industry already has been grappling with the after effects of FTX and Alameda Research's implosion and the allegations that were made against Sam Bankman-Fried, because we have to keep in mind this individual we are referring to, this 31-year-old, was not just the CEO of FTX. He was also a leading voice for the crypto industry as a whole. He frequently appeared on Capitol Hill, lobbied before lawmakers for the industry. He was seen as one of the most credible voices in the business. And so when all of that imploded, the credibility of the wider industry really did take a hit. Now, this could be somewhat of a cathartic moment for the industry once this trial is wrapped up and they can kind of put the issue to bed. But I think in a lot of ways, the industry is still dealing with the after effects, still trying to recover, reestablish some of the credibility as there's a lot of regulatory and legislative effort underway in Washington. And the Sam Bankman-Fried aftertaste may still be lingering in some ways. And this trial could really revive a lot of that dirty laundry.
Well put, Kaylee Lines. Thank you. We appreciate the coverage throughout the day. And we want to now bring you some expertise here in terms of what this does mean for the industry, regulation writ large, also central bank adoption. Ishwar Prasad, I'm pleased to say, Cornell University professor of trade policy, is with us. And of course, most notably, you worked for the IMF, the International Monetary Fund, but also you're the author of The Future of Money, How the Digital Revolution is Transforming Currencies and Finance. What does this particular lawsuit, this particular moment in history mean for the adoption more broadly of crypto, do you think?
So Caroline, as Katie correctly pointed out, the industry is hoping that this will be a cathartic moment in the sense of cleaning out some of the charlatans and perhaps also providing some regulatory clarity if regulators do move forward. But the reality is that Sam Bankman-Fried, again, was seen as a messiah in some of these circles, and he was seen as delivering on some of the promises of decentralized finance. Now, what the FTX collapse really shows is how far this notion of Bitcoin and decentralized finance, which was supposed to turn away from traditional financial institutions, how far it has strayed from that promise. In effect, what we are seeing is that many of the problems of traditional finance are being imported into the cryptocurrency world. In particular, centralization in the form of exchanges like FTX, which become single points of failure. And the notion that we can actually have decentralized trust, which was the whole underpinning of Bitcoin, doesn't quite seem to be bearing out, because we are seeing that people seem to want to hold their crypto assets in centralized exchanges like FTX, where they also undertake trading activities.
Yeah.
So right now we seem to be seeing a lot more centralization rather than decentralization.
That's interesting. But where could we see an optimization of decentralized exchanges? They do exist. There's Uniswap, for example. How are we seeing a movement towards that future of crypto, if at all?
I think we are beginning to see a bit of a bifurcation. There are many people who view Bitcoin and other cryptocurrencies as financial assets, really. And those are the people, including many somewhat naive retail investors, who seem to be taking the speculative approach to cryptocurrencies, and they're holding on to these assets. But at the same time, there is actually a rather vibrant market of decentralized finance, which so far has not really delivered on its promise of democratizing finance. It's created a lot of financial engineering, speculation, and so forth. But I think there is real promise there that with blockchain technology, we might be able to move to a world where we no longer rely on traditional institutions, where blockchain-based finance through smart contracts and so on can make financial systems a lot more efficient.
Ishwar, what is necessary to get there? Is it clear regulation, not just in the US, but more globally?
Regulation is certainly going to be needed, Caroline. I think regulation that creates guardrails so that, first of all, you have some of the basic elements of financial stability, institution-specific stability, as well as systemic stability taken care of, investor protection considerations taken care of, and most importantly, guardrails to make sure that we don't have excessive concentration in the space or decentralized finance being used purely for speculation or for illicit transactions of various sorts. And I think the notion of the industry policing itself through technology, I think it's not going to work. We are going to need some guardrails. And the question is, how best do we set up those guardrails without stifling the innovation together? I think there are steps being taken in many jurisdictions, including the US, but we are still a long way away from the right sort of regulatory environment so that we can get this ecosystem to foster and thrive without necessarily creating illegal and illicit activities.
Ishwar, give us your, therefore, bird's eye perspective, your global expertise here, because are there areas where you think are leading the charge in terms of a best fit regulatory environment?
Now, Europe, the United Kingdom, and Japan have moved forward in terms of at least trying to define various categories of cryptocurrencies and crypto assets more broadly, and that's certainly helpful as a start. But I think, Caroline, there is really still a sort of conceptual struggle going on in terms of trying to decide whether one can take existing regulatory frameworks and fit these new products into them, or if these are new technologies that require completely different regulatory frameworks. One thing that is becoming clear is that these are not the traditional sorts of products. They do have spillover risks into traditional financial systems, and we're going to need a coordinated approach at the global level rather than fragmented approaches at the national level. So we're making progress, but very slowly.
What does the role of the central banks have here, Ishwar? I know this is something that you've looked in more broadly because of the digital revolution, as you call it in your book, how it's impacting currencies more broadly.
I think the biggest legacy of cryptocurrencies really is going to be that they have shown a pretty harsh light into the inefficiencies of traditional financial systems, especially international payments. Now, central banks are responding to this partly through regulatory actions, but partly also by fostering better forms of digital payments that are much more inclusive. In many parts of the world, payments are largely digital already, with physical currency or cash not playing a big role. So many central banks are moving towards central bank digital currencies that can be used for retail payments. In the US, it has catalyzed action by the Fed to move towards a suite of better wholesale and retail payments in the form of FedNow. So I think a lot of nice changes are brewing in financial systems, including in domestic international payments, thanks to cryptocurrencies. But whether cryptocurrencies themselves will play a very important role in this, I think, remains to be seen.
There is, therefore, this sort of tension between generally a centralized version of what the utopia is of pure decentralization. And then, of course, there's the need for regulation. More broadly, Ishwar, when you've written a book about this, when we've seen the highs and the lows of exuberance around crypto die off, how many people are still asking you for your guidance? How many years do you think this will ultimately take?
I think there is a fundamental shift in terms of digitization of payments, as I mentioned, but also, the ability for financial institutions to conduct existing forms of business in more efficient ways, but also to foster more competition among financial systems. And certainly, as we see cross-border finance become much more friction-free, thanks to these new technologies which are being adopted even by traditional financial institutions, I think we will see significant efficiency gains. The real concern is whether, like in the cryptocurrency ecosystem, we end up seeing even more concentration in traditional finance because existing incumbents could end up using these technologies to their advantage. And I think this is where regulators will play a very important role to make sure that regulations don't just become a barrier to entry for new financial firms, but just create new guardrails for this innovation to thrive.
Ishwar, really great to get your expertise as an author and, of course, as a professor of trade policy over at Cornell University. Ishwar Prasad there, we thank you. Meanwhile, coming up, look, we're going to talk about the future of regulation slightly differently here. U.S. senators hoping to meet with President Xi Jinping in China next week. And that's as talks about Micron are clearly on the agenda. We're going to unpack what the congressional leaders hope to accomplish on their visit. Meanwhile, let's head over to Asia. When we're looking at one particular stock, we're seeing the trading of it here in the United States, of course, American Depository Receipts of TSMC. Now, notable that this stock has erased $77 billion of its market cap since the June high. It's basically, lost more value than any other Asia-traded stock. We're bracing for their earnings October the 19th, but also for the prolonged weakness in the chip sector. We're currently under pressure once again today. This is Bloomberg Technology. Time now for Talking Tech. First up, several Taiwan-based tech firms are actually helping Huawei build a secret network of chip plants across southern China. Now, it's unclear whether the company's potential involvement violates American sanctions because of just how complex the curbs against Huawei are, but Huawei did not respond to a request for comment on Bloomberg's story. Meanwhile, Japan is approving as much as $1.3 billion in subsidies for Micron's Hiroshima factory. This will help Micron install ASML, that's a European maker of equipment, its extreme ultraviolet lithography equipment used to make advanced chips. Look, the approval marks a win for Micron as it grapples with uncertainty in China, one of its largest markets. And also on Micron, let's talk about that Chinese relationship. A bipartisan group of US senators hope to meet President Xi Jinping in China next week with discussions about Micron being top of the line. The delegation, led by Senate Majority Leader Chuck Schumer and Republican Mike Crapo, will raise the issue of Micron's ability to do business in China. It's all according to Bloomberg sources. Micron faces an ongoing probe by the Chinese government's cybersecurity administration, and we want to get more on this entire story with Anne-Marie Horden, co-host of Balance of Power. And I mean, ultimately, how likely is it that these senators will actually meet with Xi Jinping?
Well, we do know from an interview our colleagues had with Senator Mike Crapo that is one ask, but so far at this moment, Xi Jinping has not guaranteed that meeting. There's going to be a flurry of meeting when these group of bipartisan senators go over to Beijing. We do know that in 2015, Xi Jinping did sit down with a number of congressional leaders on a state visit, but normally these trips, what you would see is that senators or any sort of lawmakers, a cabinet minister, they would meet with other ministers within the Chinese Communist Party government apparatus, but not Xi Jinping himself. But potentially a Xi meeting could be on the agenda. And this could also open up the door for that Biden-Xi Jinping also potential meeting that could happen in November at APEC. So that's the first thing. Potentially there's a Xi meeting with these bipartisan group of senators. The other is, of course, what's brought up. So Senator Schumer said other things will be brought up like human rights, like fentanyl. But we do know that Micron is really important for both this bipartisan group, not just where Micron is headquartered, but where they're potentially going to build new factories. One is going to be put in New York. And Micron came out over the summer saying about half of their sales are linked to companies headquartered in China. This cybersecurity review has been a huge deal on this company, whether or not how much they could do business in China, but also on their revenue.
I mean, what is it? About half of its China sales seem to be at risk at the moment. So you're reminding us that Crapo is, of course, showing the support of Boise, Idaho. You've got Chuck Schumer of New York. But why coalesce around this particular company, this particular moment? What does it say more broadly about U.S.-China tech relations? Because it's disintegrating sort of across the board.
Well, it has disintegrated, and the Chinese government will say that is because of the export controls and the other penalties and sanctions that you're seeing from this administration. This administration, the Biden administration, has been very clear. They want to take a narrow approach, but they do want to make sure that China is unable to get their hands on critical tech that potentially China could use to bolster their military. So many see that what China has been doing in terms of the cybersecurity administration, looking at what's going on in Micron, they view that as a tit for tat coming back to the United States about what they did, what they're doing when it comes to U.S. technology that companies want to get their hands on in China. So it does feel like it's at an all-time low, which is why if these senators were to meet with Xi Jinping, it potentially could help thaw some of that, especially when it comes to Micron.
From Huawei to Micron, it's all coming full circle. We thank you so much, Bloomberg's Anne-Marie Horden, with a breakdown there.
This, in my opinion, is going to be a super huge impact, generative AI and so on. It can have an enormously beneficial productivity impact.
Ray Dalio there with our own David Weston, talking about the impact of AI, but sticking with more broadly artificial intelligence, how it's upending many industries that we keep talking about on the show. But when it comes to actually hedge funds, like Bridgewater Associates, many money managers just aren't seeing the technology actually lead to outperformance. It's the subject of today's Bloomberg Big Take, and we're pleased to say that one of the authors is with us, Bloomberg's Justina Lee. And fascinating deep dive that you do to show that at the moment, while all these stocks are roaring higher on the back of AI bets, actually deploying AI within the stock picking industry is pretty hard to do, right?
Yeah, exactly. I mean, it really is the irony of this year's stock market. And I think what a lot of investors are discovering is that financial data is very different from a lot of other kinds of data. Because it's a bit like if you were, training ChatGPT in like gibberish. Because if you look at, what is moving the S&P 500 every day, I mean, there's so much noise in there that if you're just kind of pushing all that data through the machine, I mean, the machine is picking up a lot of noise, which might not be that helpful in helping you predict what happens, to the S&P tomorrow. And I think that is the problem that a lot of hedge funds are running into. But that's definitely not stopping a lot of quantitative investors from trying to crack that puzzle.
And they've actually been trying to crack the puzzle for long before ChatGPT became part of our lexicon, right, Justina? And talk to us about some of the individuals you spoke to. In particular, the co-founder of Research Affiliates went off and founded in 2016, I think, was it Reliant Global Advisors, an AI-driven sort of quant fund? And, well, he was really upended during the COVID crisis, right? Because there's just no data for that.
Yeah, I think the COVID crisis is a great illustration of why AI is really hard in finance because, the English language is not that different, 100 years ago from now. Cats and dogs have looked the same, and that's why our iPhone can kind of recognize animals. But, when it comes to financial data, there are a lot of regime changes. But I think the hope for a lot of people like Jason, who's the co-founder of Research Affiliates, who is a convert to using machine learning in finance, is that he's hoping if you feed a lot of the data into the machines, they're kind of picking up how the environment is changing as well, and that will make his systems more adaptive. And that is sort of, I think, the dream of a lot of people that are trying to apply machine learning in finance.
At the moment, though, with AI, with all the issues with the data, garbage in, garbage out, are we able to still see that quant funds and indeed just AI-driven ways of stock picking is kind of okay compared to people? Are we already seeing jobs being lost?
Yeah, I think for now, not just yet. I mean, if we look at the track record of AI hedge funds, there is a hedge fund index. I mean, they're not really doing much better than the hedge fund industry overall. And so it's not obvious that they're necessarily better than humans. But one perspective I've heard from reporting this story is that in a way they don't need to be better than humans. I mean, if you can kind of run a portfolio that does just as better, but with far fewer humans, that might already be more efficient. And I think if we kind of, zoom out a little bit and look at kind of the use of AI in terms of productivity hacks. I mean, everywhere on Wall Street, we're seeing a lot of uses for, using something like ChatGPT to summarize research, to write the code, or there are now a lot of efforts in using kind of these machines to read the news that we write or kind of read tweets that we post and to try to kind of turn those into trading signals. And so I think there are a lot of uses, even if not everyone's kind of using AI to try to beat markets.
In finance, you'd be very successful by just being a little bit better than 50%. That's a great quote in your story. We thank you so much, Justina Lee. Welcome back to Bloomberg Technology. Let's get back to some of that idiosyncratic news when it comes to SBF, Sam Bankman-Fried. He is charged with 7 counts of fraud and money laundering, we know, a case that has been going on for nearly a year now. So how do we get here? Some quick reminder. Katie Lyons got the breakdown on a series of unfolding events.
In the span of 3 years, Sam Bankman-Fried became one of crypto's biggest stars. In May 2019, Bankman-Fried and business partner Gary Wang founded FTX. Its goal? To create a safe and responsible platform for traders. By October 2021, venture capitalists had poured millions into FTX, and A-list celebrities like former NBA player Shaquille O'Neal, model Gisele Bündchen, and comedian Larry David had endorsed it. That same year, the firm was valued at $25 billion, and users soared to more than 5 million globally, at least 1.2 million of them in the U.S. The FTX name became well known, appearing on t-shirts, in commercials, and even on an NBA arena. By early 2022, the Bahamas-based company's valuation skyrocketed to $32 billion. FTX had become one of the world's biggest crypto exchanges. Bankman-Fried's net worth climbed to $26 billion, and he said he wanted to do good with his money, following effective altruism.
I both think it's not what I should do with my money. I think I should be thinking about how I can help the world with it.
The then 30-year-old also became a major political donor. He contributed tens of millions to bipartisan political action committees and frequented Capitol Hill to be a voice for his company and the industry. At the time, he had no plans to slow down.
I'm going to be here for the long term. I have no plans to leave. That is not something that is on my horizon.
But in November of 2022, things began to unravel. CoinDesk reported that the crypto hedge fund Bankman-Fried had also founded, Alameda Research, had a significant portion of its assets made up of FTT, a token that FTX created. In response, on November 6th, CZ, the CEO of rival crypto exchange Binance, posted to social media saying, quote, "We have decided to liquidate any remaining FTT on our books." The move triggered a massive wave of withdrawals, sort of like a run on the bank, and FTX didn't have the funds to meet them. In a rescue attempt, FTX reached a deal with Binance to sell itself, but Binance backed out.
It became very quickly, there was a lot of funds missing, to the tunes of, double-digit billings. I couldn't trust any of the information in the data room.
So by November 11th, it was over. FTX filed for bankruptcy and Bankman-Fried resigned as CEO. That same month, he apologized at a public event.
I made a lot of mistakes. There are things I would give anything to be able to do over again. I didn't ever try to commit fraud on anyone.
But just a few weeks later, Sam Bankman-Fried was indicted, accused of misappropriating billions of dollars at the cryptocurrency exchange.
It's fair to say that by anyone's lights, this is one of the biggest financial frauds in American history.
Great breakdown from Katie Lyons. What has it meant for institutional adoption, for the hope of crypto more broadly? Let's talk about it with Bitwise Asset Management CIO Matt Hogan, who joins us now for his take on all of this. And you've got your own news to bring to the table about offerings to institutions. But just focus on the trial and the start today. For you, will this be a cathartic moment for the industry? Is it going to be more pain before the sun comes again?
Yeah, it's a great question, Caroline. I think of it as mostly old news. You know, we work with primarily institutions and financial advisors, and from about November to April, they wanted to talk a lot about FTX and what it meant. But earlier this summer, BlackRock announced it was launching or trying to launch a spot Bitcoin ETF. You know, the world's largest asset manager saying the coast is clear, we're ready to move on, we're ready to move to a new era of crypto, kind of put a cap on the FTX conversation. So it honestly hasn't come up in the past few months. I think there'll be some lurid coverage of the FTX trial, but that is crypto of the past. I think a lot of people are thinking, what happens next in crypto? What's exciting? Let's move on.
Okay, and so a lot of that excitement, some of the catalysts for actually Bitcoin itself and the rally that we've seen in some of the digital tokens has been the hope of a spot ETF. You're still offering ETF and ETP products, this time related to ETH for the first time. Can you talk us through that and why you're not needing to have a spot one for the time being? It's more about the futures.
Yeah, absolutely. We're very excited to eventually launch spot ETFs, both on Bitcoin and Ethereum, once the SEC allows that. But we shouldn't let the perfect be the enemy of the good. And so this week we launched two Ethereum-tied ETFs, AETH and BTOP. AETH is 100% Ethereum futures, BTOP 50% Bitcoin, 50% Ethereum futures. Those ETFs are going to be very highly correlated to the underlying price of Ethereum and Bitcoin. And people have the chance to invest today. You know, if you think about when the first spot Bitcoin ETF was filed, way back in 2013, the price of Bitcoin was below $100 a coin. If you've been waiting for that spot Bitcoin ETF to come, you've missed a lot of appreciation. I think there are a lot of investors out there that know a spot Bitcoin ETF is coming, think an Ethereum spot ETF is coming, and want to get in now ahead of them. And for those investors, AETH and BTOP are great solutions.
So talk to us who these investors are. How big are we playing? What sort of institutions are coming to want to get into your product?
Yeah, it's an amazing question because retail grew into this trillion-dollar asset class really on the back of retail investors. We haven't seen financial advisors come in a major way. We haven't seen institutions come in a major way. But as you and I know, that's the majority of the market. Maybe 80% of all the wealth in America hasn't really tapped into crypto yet because they can't invest through an app on their phone. They need regulated ETFs. And so I think this is the start of a game changer for the crypto industry. I think we're going to see significant inflows. That 80% of the market that's outside is going to come in. And a year from now, 2 years from now, crypto is going to be a mainstream asset that fits in portfolios alongside stocks, bonds, real estate, and other commodities. It's going to be mainstream in a major way.
What gives you that confidence, though? Because we heard that a couple of years ago, and then volumes slowed to a trickle, institutional adoption just fell off a cliff.
Yeah, I'd point to three things. One, we now have ETFs, right? For a long time, people criticized this SEC for being too slow to approve ETFs, but we had none until 2021. Now we have close to a dozen, and more are coming. So we have ETFs. That brings it mainstream. Two, we have large asset managers coming into the space. BlackRock, Fidelity, Franklin Templeton, the big teams are coming, and that means a million more conversations with professional investors. And then the third most important thing, we're starting to see the real-world use cases that people have been asking for. Just today, UBS is out with UBS tokenization, talking about tokenizing bonds on the public Ethereum blockchain, the same blockchain you can invest in through AETH. And I think we're going to see a blossoming of real-world applications, and that's what's going to bring the institutions.
I suppose it has everyone been waiting for the killer DApp when it comes to the retail community, but also, you know, this ongoing narrative that like, oh, we like the underlying technology, but we don't really like the assets in and of themselves. Why would the adoption of blockchain technology for tokenization of assets, private or public, really be a calling card to want to buy into an ETH ETF?
Oh, amazing question. If you look back a few years ago, there were all these projects on private blockchains. You'll remember JP Morgan had a private blockchain, and people were like, yeah, that will be the future. It's like the intranet in the early days of the internet. If you look at the pilot projects now, they are all built on Ethereum. PayPoint's new stablecoin, built on Ethereum. These bonds being structured by Goldman Sachs, JP Morgan, UBS, all built on Ethereum. Often in technologies, these private controlled environments look attractive at the beginning, like intranets did in the early days of the internet. But over time, it's the public, open, and decentralized platforms that win. And I think if you look at where the major institutions are building now, they're building on things like Ethereum, and now investors can invest in that in an ETF.
What are still the limiting factors of Ethereum in particular? I mean, there was the move to proof of work to proof of stake, the idea that you wouldn't have to have at least so much energy consumption within that, but still there was a complaint in gas fees. Still there was a complaint that ultimately this is still pretty cumbersome when you're just trying to use it as a layperson.
Yeah, there's still a lot of gaps. UX needs to improve, the user interface. The gas fees have come way down with the rise of layer 2 solutions, so that problem is at least 50% solved, but it needs to be 100% solved. And then of course the major unlock, the thing that's going to cause a step function, is regulatory or legislative clarity. Now I'm optimistic. We've recently seen over the past few months a number of bipartisan bills introduced, bipartisan letters coming out telling Gary Gensler to approve a spot Bitcoin ETF. There's real political momentum in Washington behind it. That will be the final unlock, but we are already seeing those signs. And again, I'd point to those major institutions building today.
There has been a worry that the regulation is evolving slower here, though, than elsewhere. Do you see some of the talent shifting abroad? Do you see people wanting to build things not in the US?
Yeah, it's really unfortunate. We're seeing a lot of the attention shift to London. We're seeing a lot of it shift to Singapore. The crypto environment there is blossoming in a way it's not here in the US. The US always figures out the right thing after it exhausts all other possibilities. I'm confident we'll do that here, and still there's a lot of capital invested in crypto, but we are behind. I do see progress. Over the last few months, I'm really seeing a change in Washington. Makes me very optimistic for 2024 and certainly 2025.
Some optimism around this crypto space. Matt Hogan, thanks for coming in and talking about it. Bitwise Asset Management CIO there, Matt Hogan. Meanwhile, coming up, look, we're going to be taking the pulse of the VC industry. Is there any optimism there following the FTX debacle? We've got Steph Chu, partner at the fintech-focused firm Portage. That's next. Meanwhile, look, we are continuing to watch individual companies today. Not much enthusiasm around this particular name. Palantir on the downside by 4.6%. But give you context, this is a company that has run up in recent days because, of course, they got that big contract from the US government, this desire by Alex Karp to see more AI adoption by key governments, so managing to be selling into the US for the time being. Maybe a bit of profit taking on a down day. This is Bloomberg Technology. On today's VC Spotlight, I'm pleased to say we're joined by Steph Chu, partner at Portage. It's a global fintech-focused platform investing in innovative financial technology companies, very much at the early stage, Steph. And look, you've deployed, what, $300 million of capital in the companies that you're currently analyzing. And we were just having a pretty optimistic conversation, shall we say, around crypto adoption more broadly, even in spite of SVB, SBF. What is the industry feeling right now in the world of fintech and indeed putting money into these startups?
Fintech has been, as the entire tech sector has been, I would say, fairly slow through the year. But I will say the story, Q2 seems to have been a bit of an inflection point. If you look at the data, round sizes for the first time have gone up in Q2 23, gone up again in Q3. Also, I would say valuations have slowly ticked up. So it might be that Q1 could have been the bottom, both for fintech, but also for early stage startup investing in general. So I'm definitely seeing signs of optimism in both fintech plus the broader tech ecosystem and environment.
And what do you think was the catalyst for that bottoming? If you are starting to see valuations creep up, is it that these companies have taken some bitter pills, they've rectified how their revenue and their burn rates are, or is it more that we're getting more broad ideas of optimism, like exits that we started to see in the IPO market?
I think it's a combination of both. So one, everybody's looking at the IPO markets very carefully. I think the story of ARM and Klaviyo, the AI story is pretty clear. If you've got an AI story, you're going to trade up both in the public markets, but also you're going to trade at a premium in the private markets, early stage and late stage. I think the second factor is lots of companies actually delayed their raises. Everyone raised a lot of money in 2021 and they delayed, and I feel like now folks have come back to market in 2023 because you can't wait forever. It's estimated that unicorns will need to raise $300 billion by the end of this year. And funds, and the third factor I would say is funds are really sitting on almost $400 billion of dry powder, which was raised in 2021 and 2022. So other VCs are itching to really get deals done. So I think it's a combination of all three of those things that are driving some kind of wider optimism in the market, not only at the seed stage, which if you look at seed valuations, they really didn't change all that much from 2020 to 2023, but it's really at Series A and onwards that we're really starting to see more deals get done and valuations start to tick up in 2023.
Are LPs excited for their VC commitments to start to get deployed? Or actually are we hearing that LPs are putting on a bit of pressure to not deploy for the time being?
I think LPs are definitely not putting on pressure to deploy in short time periods. In 2020 and 2021, we saw funds deploying their full capital allocation, which would typically have been 3 to 4 years in 12 months, sometimes less and sometimes closer to 18 months. And so we haven't seen a push from our institutional LPs to come back to market. Actually, it's been a little bit of the opposite, because if you are an institutional LP that is a pension, you might be facing what's known as the denominator effect, which is you need to rebalance your portfolio. And as the public markets went down, we've seen the share of privates be potentially look a little bit misallocated. And so there's been a shifting from some of our LPs. And so I don't think there's been a push for VC funds to necessarily deploy, but we are deal makers at the end of the day. So I think everybody in this job is excited about getting back to doing deals.
Certainly. We'll see how those deals continue to unfold. Steph, it's been great speaking to you. Thank you for shining a light on the LP side of the equation, as well as where to be deploying. Steph Chu, partner at Portage there. We thank her. Meanwhile, look, I also managed to catch up with, well, another founder, but you'll know her name, Ellevest CEO, Sally Krawcheck, of course, storied career in Wall Street, then pivoted to become a founder herself. I was over at the NASDAQ, and we talked about how her company uses technology to help women build wealth beyond the financial tools traditionally built by or for men. Take a listen.
Well, we were the first who said we're going to change the underlying product using technology. And to your point, we're the first who built a gender-aware investing algorithm, which doesn't matter so much if you're a guy, but if you're a woman who earns less, your salary peaks sooner, you take more career breaks, and you die later, if you assume you're average, you really risk running out of money. On top of that, we use technology and learning and research to change about a zillion things about the product. For example,
give us some.
So we learned, for example, that it's not that women are risk averse. It's that when they get to the point of the onboarding where they say, what's your risk tolerance? We found that what men will do is say, that seems pretty important. I'm going to take an educated guess and continue on. And women say, that seems pretty important. Because I was socialized to be perfect, and little boys are socialized to be brave, as Reshma Saujani says, I'm going to leave. I'm going to figure this out, and I'm going to come back. Do you know what is more interesting than figuring out your risk tolerance? Everything. So therefore, you don't come back. Same with jargon. I could go on and on.
So they're just not getting past that hurdle in the Q&A when you're first signing on to the app?
As it turns out, the onboarding was built for men. And we said, okay, how do we give her the information that she needs, or how do we solve the problem of if she doesn't know her risk tolerance, what can we do about that? And rather than just say, oh, it's lost, what we said is, we'll do the hard work. Tell us everything about you, your characteristics, how old you are, what part of the country you're in, how much you're earning, what industry you're in, so we can figure out what you should earn over the course of your life, and what you want to achieve.
Artificial intelligence startup is challenging more established rivals by solving a vexing problem, letting anyone create an image of a cat wearing a t-shirt with a clever slogan that you can actually read. Now, those humorous lines are actually written by Rachel Metz, who has a great story on Ideogram today. Why is this so hard for other image generators to do in generative AI, Rachel?
So usually these types of AI image generators are trained on pairs of images and related corresponding text. Often those images either won't have text in them or they won't be trained using like the wide variety of text that you would use if you're training a system on, say, pictures of apples or pictures of cats, where you would have them from different angles, different lighting, a lot of different kinds of apples or a lot of different kinds of cats. So this company won't say exactly how they're doing it, but it does sound like they're using quite a bit of text in their training images, which may have really helped it get a lot better at doing things like giving you pictures of a cat wearing a T-shirt that has a slogan on it.
They're beautiful pictures. Go see them on their story. Ex-Googlers founded Ideogram. How are they competing against Midjourney or DALL-E, for example?
They've taken a really different approach than Midjourney or OpenAI or Stable Diffusion. Theirs is a little bit more like a social network at the moment. The website it's free to use. There isn't a paid service at the moment, but they're planning to have one. And at the moment, everything you generate is open to the public. They're hoping that actually helps with behavior a little bit. So perhaps people will be a little bit kinder about what they're generating, not use it as naughtily as they might if they could do things privately.
Notable as we all worry, perhaps ahead of elections and indeed deepfakes. Rachel Metz, go read her story. It's another brilliant one about the startup world in AI. We thank her so much for it. Meanwhile, that does it for this edition of Bloomberg Technology. Stay with Bloomberg Television because it's Bloomberg Crypto up next, a deep dive into the FTX trial. As it starts to unfold, you will not want to miss it. And also, well, don't forget to check out our podcast. Find it on the terminal as well as online on Apple, Spotify, iHeart. From across the world of FTX to fintech and AI, we got it all. This is Bloomberg Technology.